If you're a Canadian living in the GTA, then I'm sure you're well aware of the real estate market that is absolutely flying right now. I've seen this chart here. It's the Canadian real estate price growth, and we can see the way that the price growth has really gone over the last couple months. There's a few different factors that have caused this, but in this video, we'll be looking at the bull case. Can these housing prices be sustained? Will they go higher? Or is the bear case out there? What is going to cause these prices to come crashing down? So stay tuned in this video. If this is your first time here, my name's Nick. Welcome to Ways of Wealth. This is the market recap where we highlight key events that are going on in the market over the past couple of weeks. Before we get into the video, I'd like to ask you a huge favor. If you learn something new or you get some value out of the video, please smash that like button. It definitely helps me out. And if you haven't already, consider hitting that subscribe button, turning that notification bell on. I would definitely appreciate that. With no further ado, let's hop into the computer and talk about real estate in the GTA. Like I showed you before, the price growth of benchmark home across Canada has gone up over 40% in only the last couple of months. Definitely a cause for concern, especially if you're looking to get in the market. When you're looking at risk versus reward, if we're at the upper end of this echelon, then realistically, can we go higher? So that's one of the things that we're here to talk about. So the first part is an article that says the average home in the GTA is now over $1 million. This is the first time that it's ever happened, and definitely a huge milestone. I mean, a lot of people in Canada do consider real estate to be kind of the pinnacle of their wealth. It's what everybody strives for in this area, is to be a homeowner. The only difficult part comes is that that's where your portion of your wealth becomes trapped, and you really have to wait to sell. And especially if you're going to sell right now, you're going to have to buy in this same market. And we've seen prices across the board in Ontario just skyrocket. And I think this is kind of emulating in the US as well. And I think one of the reasons is inflation and the inflationary concerns that are happening right now with the amount of money printing that's happening, not only in the Bank of Canada, but also the Federal Reserve in the US, and this kind of increase in prices is kind of replicant of why that's happening. But we'll start off talking a little bit about the sentiment, or kind of what's been discussed over the past couple of years, because everybody's been saying the Toronto market has been in a bubble for 10 plus years now. So the bulls are kind of saying, well, it's been in a bubble for so long, when's it gonna pop? And one of the earliest was Mark Carney, who is the Jay Powell of Canada at the time, who called the country's reliance on the housing wealth unsustainable back in 2012. Then came a wave of American financiers, the guy from The Big Short by the name of Steve Eisman. He's been shorting the banks who hold all the mortgages for a long period of time, and whether he's had to cover his shorts or whatnot, I'm not entirely sure. But what I can tell you is that he has definitely been wrong up until this point. There's a gentleman here by the name of Aaron Moore, who is a house flipper. He goes in, buys homes. In this article, it shows an example of where he had a 28% return in only a couple of weeks. So he's sitting here, he's saying, you know, this is super bullish and this should continue just the way that it's all set up. And some of the factors as to why the housing market in the GTA is the way that it is: first and foremost, there's not enough supply on the market. They aren't making enough homes to put out there when the supply is constrained. When there's not enough new homes going into the market, whether new builds or listings, the demand is going to increase. Increased demand increases the prices. That's kind of one of the factors in the last couple of months as to why the prices are high. It's because there's not enough supply. Another implication on that supply is the fact that there's a green belt regulation in there, meaning that they can only build within a certain area. And when you're cutting down the supply of area in which you can build, you're really increasing, you're manufacturing that demand as well. So that's another factor that goes in there. There's a bunch of people that say, hey, let's just start building like crazy. We'll build. And that will essentially, bring down the demand because we will have increased supply in the market. Another factor is the fact that we are an immigrant nation. That's how we grow. When you're bringing in 400, 500,000 people a year, they are, coming to the city centers. They do want to be in these areas, especially a multinational city like the GTA or Toronto. They are fixating towards these certain areas. So you're creating an increased demand on that side as well. So that's just kind of some of the reasons as to why the GTA has blown up the way that it's blown up. You're seeing places, an hour and a half away from the downtown core that are going for 600, 700,000. Townhomes, semi-detached, places that are maybe between 1,600 to 2,500 square feet of increase, hundreds of thousands of dollars over the past. So is this sustainable? That's the biggest question. Are prices going to continue to go higher? And that's where a gentleman by the name of David Rosenberg, short form nickname is Rosie. He I find that very funny because he typically has very bearish sentiment on the market, and he talks about that in this article that we're going to look at now. And he's saying that the housing bubble is worse than the lead up to the US subprime crisis. So going back to the 0809 subprime mortgage crisis, they were wrapping in together these mortgage-backed securities. They were wrapping in a bunch of debt or mortgages that weren't going to get paid, and they were putting that with good mortgages, and eventually the financial system just collapsed. Without going into further detail, David Rosenberg, Rosie, he's seeing a lot of similarities between the two markets right now, and he is issuing a lot of concern. So he talked on Friday, financial conditions in Toronto and Vancouver housing markets have deteriorated to the point where policymakers should have grave concerns. I'm taking a look at the metrics I had in my hands when I called the US housing bubble in 2005 and 2006. I was looking at home price to rent ratios. I was looking at home price to income ratios. I was looking at the extent to which the household sector was overexposed to residential real estate on their balance sheet. I've got news for you. The numbers in Canada on all the metrics are higher now than what they were in the peak of the US housing bubble 13 years ago. So what he's talking about there is the fact that our income, our wages have not rise in the same way that the housing prices have rise. Rents are not as high as what a mortgage payment would be based on these new housing prices. These are definitely causes for concern, warning signs, especially since it's so fresh, it's so recent that we saw the same thing happen in 2008, 2009 in the US. So his repeated warnings over a housing bubble came as a cocktail of record low interest rates and sky high demand for detached homes during the pandemic led real estate prices in Canada's two largest markets. So something that I haven't touched on as well that's kind of leading into the higher prices is the interest rates are at such lows. So anybody who's been in the higher echelon or higher class hasn't been affected as much as, the lower class people that have lost jobs. So they're going in, they're experiencing these low interest rates. Money is super cheap. And then the secondary fact is that people are leaving the condos downtown. They want detached homes. So that's pushing the market on the outside. Rosie goes on to say, bubbles can fester for years. Remember the dot-com bubble? We talked about 1929 for the stock market. We are in a very unstable situation. When you have a housing values running so far beyond the underlying fundamentals, they're saying that there are measures that can be taken in place by the government to impose taxes or some type of regulations to help mitigate it. But the fact of the matter is that it looks like the Bank of Canada will continue to let this market run a little bit hot, because I think if they do put any implications or they raise interest rates, it will cause not only the real estate market to crash, but I think it will cause the stock market to get heavily impacted. But that's basically what it is. We have a situation where inflation and multiple different factors, supply shortage, low interest rates have caused the real estate market to be absolutely explosive right now. You have homes moving in 2 or 3 days, selling for $150,000 over asking. In the long run, it is definitely not sustainable. But when does the party stop? David Rosenberg doesn't know. He's saying that bubbles can fester for a long time. Some people would argue that this bubble has been festering for a lot longer than 5 to 10 years, even going back to 2014. But it is definitely crazy to look at risk versus reward. I mean, I'm not a financial advisor by any means, but I look at these housing prices, and I think it's almost better to move right now any new capital into the equity markets to get some type of dividend. Because when I do the reverse math and I look at how much a mortgage is and I look how much rent is on the market, it's not sustainable. You're taking too much money out of your own pocket. I mean, obviously there's the conversation about profiting or just using it as cover your carrying costs. You can't even do that. So yeah, right now, if I have any new capital, it's probably best to not really look at real estate. But then you could play the other side and say, they're not making any more land. It's not like they're going to have a massive amount of homes come on the market. So obviously there's the bull and there's the bear case. And right now it is something that is very interesting to watch and will continue to run. But I hope you enjoyed this episode. I hope you got some value out of it. If you did, smash that like button. It definitely helps me out. And if you haven't already, hit that subscribe button, turn that notification bell on. I appreciate your support. I hope you all have a great week on the markets. Happy trading.